exposing the secret sauce in business-to-business marketing. The TAGLine Podcast is where real stories meet proven strategies. Let's elevate your business. Real strategies, real stories, real results. In the business-to-business industry, you're not selling to businesses. It's human to human. We break down what works, what doesn't, and how you can truly stand out. Transparency, credibility, growth. Get a behind-the-scenes look at what drives success in business-to-business marketing. Get ready for the next TAGLine Podcast powered by the Aebli Group.
Welcome back to the TAGLine Podcast powered by the Aebli Group. I'm your host, Justin Starbird, and today we're diving deep into the get a refreshing take on private equity with someone who's reshaping how growth investments are made. I'm joined by Neel Bhargava, a founder of the Aebli Group, a firm that stands apart in the PE world by forging true partnerships with business owners. Neel, thanks for joining me today.
Yeah, thanks for having me, Justin. Looking forward to speaking.
Yeah, this is exciting. Done a little bit of research and checked out some of the cool projects that you're working on right now. Talk a little bit about what is the Aebli Group?
Yeah, so Aebli Group is an entrepreneurial private investment firm focused on investing in two areas. One, multi-location, which is a business model we invest in across categories and industries, and two, healthcare. I started the firm about 8 years ago, been building it since then with a partner of mine, Aries, and we try to take an entrepreneurial approach to private equity. We look different than your typical firm. We're a small team. We have a limited number of investments, no more than 3 to 5 at a given time. And that allows us to really be hands-on supporting companies. We roll up our sleeves as needed to really drive growth, which is another important aspect of what we do. We're, very growth oriented. Our goal is when we invest in a business, by the time we exit it, which could be 5, 6 years, could be shorter, could be longer, we want that business to be 3 or 4 times the size from when we originally invested. So that's what we do. We've been pretty successfully doing that now for 8 years, and we're looking for new investments in founder and family-owned companies all the time.
Yeah. You are across industry and location. When you talk about those sorts of businesses, what sort of businesses are you profiling? Are you looking for?
Yeah. So our multi-location, sector focus captures quite a bit. In our portfolio right now, we have a gym chain. We've got a investment in a franchisee under the European Wax Center brand, and we've got a healthcare services business that operates 17 locations in Oregon. So all of those are in the multi-location bucket, and you kind of get a sense of what I mean. Brick and mortar location offering typically a service to consumers, but there's other things that fit in that as well. For example, we've been spending a lot of time looking at the education space and the youth enrichment space. Schools, summer camp operators, sports leagues. We've also been looking at things that are residential services, landscaping, garage door installation repair, all things where you can grow them by expanding into a new market or opening a new location in another state. It's a business model that we really know extremely well, and believe in the potential of.
Yeah. So when you take over some of these companies, or how do you go about it? Do you look to take a significant ownership stake? Do you install your own tech stacks? What are some of the things that you look for areas of opportunity?
We're flexible in how we invest. Though we are oriented towards majority control deals. It's not going to be, never have we done, and I don't think we ever would do 100% buyout of a business. We want the existing owner to retain some equity and usually stay involved. Doesn't have to be involved in exactly the same way or forever, but we want them to stay involved for some period of time. I think it's really important with founder or family-owned businesses that there's some continuity for some period of time. But we've done minority investments as well. The playbook really varies depending on what are the needs of the business. But some things that we find ourselves frequently doing in the first couple of years in our investment. One is team building. Usually there's a solid core, but they need to add some key positions. Could be a CFO, could be a, head of sales, could be a, senior human resources person, could be all of the above. And,
Yeah.
our team will help recruit, identify, and place those people into the companies. Another area is, financial controls and management. So, often upgrading the accounting system, taking them from QuickBooks to, a more robust system is part of the playbook in the first year. Putting in place better reporting and dashboards for the management teams as well as for us to just,
Yeah.
really understand the business a little bit better. And then growth. So, if acquisitions is part of our strategy, our team can take that fully on. We've in one of our investments, we spent 2 years driving an M&A for the company and, expanded it from 13 locations to 45 through acquisitions that we sourced and executed. Or it could be putting in place a strategic plan, and then really working with the teams to execute on that and give them what they need to do that. So
Yeah.
those are some of the areas we get closely involved.
Now, I mean, thinking about changing the business a little bit and keeping founders as a part of it, does that ever like excuse me, create any friction, or are there any challenges to that where they're like, hey, we've been doing this for 40 years and we need to, we'll keep doing it this way.
Yeah, it can be tricky to navigate. I think when it gets especially uh, delicate is when there's a transition of
Yeah.
the founder, from founder CEO to founder something else. Could be founder board member, could be founder
Right.
like strategy lead, and there's a new CEO who comes in, and a lot of the organization has only seen the business run by a founder. Oftentimes there's family members or their close friends that work, so it is difficult to manage, and it's something that you have to be really attuned to and sensitive to all the dynamics that go on there. There's no, I don't think we have a perfect solution for how to do it.
Yeah.
It just requires attention, care, and you need to make sure that um, you're taking everyone's kind of views into account, and managing it.
Yeah. So taking a step back, what made you want to jump into the space? Like, how did you get started? You mentioned you and your partner Reese, like, how did you guys get going?
Yeah, so my professional background prior to this has been a mix of larger scale private equity investing, with multi-billion dollar funds, management consulting, and a little bit of operational experience mixed in there. But after going to business school, I really wanted to pursue something more entrepreneurial, and was on that track, but ultimately realized private equity was something I really really liked, but I'd like to do it in a more entrepreneurial way. So that was the genesis of starting my own firm, and setting us up the way we are set up. But the other drivers for that were wanting to spend time focusing on companies in areas I really was passionate about or had a personal interest in or just enjoyed learning about. And when you make a private equity investment, you're going to be in a business for 5 years or longer. um, you really you spend a lot of time in that space with that business. So you want it to be with people you enjoy, but ideally it's also in a space you enjoy, or
Yeah.
something you believe in. So I wanted to be able to do that, and I wanted to be able to work with smaller companies, where I think you can have more potential for growth and therefore higher returns, and can just make more of an impact. So that was why I decided to go this route and start the firm. And since then it's been a process of building it. I tell business owners that we're looking to invest in all the time. We're entrepreneurs. Like, we've been building this firm. It might be not an operating company like yours, but it's a business no less. And we've been through that to an extent, and I think that resonates with a lot of folks.
Yeah. You mentioned you try to you stay with a group for 5 years or so. you know, how do you help them go through that exit or prepare the business? Because at first it's a little bit messy, right? You're coming in and trying to, you know, put the play or create the playbook, then install it, and then get the buy-in and put the
Yeah.
right people there. Then you kind of go through that growth, you know, where you're either merging you know, or acquiring some new businesses to bolt on, or you know, creating growth strategies otherwise. You know, what is, I guess, take me through that journey and, you know, when you decide to do one versus another and how deep you get into it.
Yeah, there's definitely stages in the life cycle of an investment. You've got your first year, you're really identifying what are what's going to really drive this investment, and how putting in place a plan to do that. I mean, you're doing that within the first 3 to 6 months, really, but it could takes the bulk of the first year to really identify that, structure it, and start executing on it. You've got probably the next few years, you're working that plan, you're growing the business, you're developing the infrastructure and team, and then as you get into year four, you start planning for the exit. So if that's your timeline, again, like we've pursued investments where it's a longer term hold, and we've also exited things in a couple of years. But taking that 5-year timeline into account, you need a plan for the exit. You want to have the business to a point where you've checked off a lot of the boxes that the next buyer is going to want to see. We're in the lower end of the middle market of private equity. We get involved with businesses that they may not have much of a team, or they don't have that infrastructure, and we're going to build that, and that's where we're going to create value. The next buyer often, wants to do some of that, but not as much, right? They want more of something developed, and they can just, you know, keep executing on the plan that's already been identified in many cases.
Yeah.
So you want to have enough proof points for that to to shine through. You want to have teed up some future growth options. Maybe you're in one state now, and you enter another state, and tee that up as the growth opportunity, or a new business line, or a new category, whatever it is. And then at some point you want to start harvesting, not making all the investments that you might if you're going to hold it for 10 years, not pulling back so much that, buyer looks at it and says, well, we need to make $1 million of G&A investment here. So it's all a balance, and it's all a process. It's more art than science, but there is I think a cadence at which you want to be entering different phases of the life cycle of investment.
You mentioned a couple times, you know, leadership and bringing folks in. You've talked about investing in transformational leadership. What does that mean, and how do you, you know, install that in your portfolio companies?
Yeah, I mean, I think a strong CEO and the right CEO in place can be, extremely impactful to a business. Like that is uh, oftentimes the largest driver of value creation, is having the right person who's really strong and fits with that business. Um, it's hard to find really strong talent. It's competitive, labor market out there. Also in the stage of business we invest in, maybe there's that founder transition, which can be difficult, as we talked about earlier,
Yeah.
or it's just a business that, doesn't have all the resources, infrastructure that a larger business does. So you have to find someone who's eager to take that challenge on, but also has the skills to do it. So it can be hard to find the right person. You have to spend a lot of time, really searching and vetting, and sometimes you get it right, sometimes you get it wrong, but you want to really make the best decision you can, and because it's a critical driver to the business. And then there's others. You want the rest of the team to also be really strong as well, but it starts with that CEO position.
Yeah. You know, thinking about the companies that you've invested in that you've had success, ones that you can talk about, you know, share, you know, how that you help them, you know, hit all their markers and milestones. You know, maybe there are some bumps in the road, but then you got to achieve the multiple that you were looking for at the exit.
Yeah, I mean, our first investment we made was in a business, a gym chain, CR Fitness, operating under the Crunch brand. back to the importance of management. That was a really, really strong management team, had been in the industry for decades, and was fully built out for that size company. And in that instance, they had a playbook, and we helped them de-risk. We put in the right capital structure. We improved financial reporting, and installed a board, and basic things like that. But a lot of it was letting the team who was really strong do what they need to do, and that's been an exceptional investment for us, and for others. Now it's the lead investor in that is someone else,
Yeah.
and the teams continue to perform. So I think it highlights the importance of having the right team in place. But in other instances, in our most recent investment, One Peak Medical, we've really been hands-on, and I've stepped in to interim operating roles when needed. We've been really involved in developing a strategic plan and taking on specific initiatives, and that's because the business it's growing really significantly. There's a lot going on. We're building
Yeah.
the team as we grow it, and they can use more resources, so we're willing to step in and do that.
Thinking about, I love that we talk about growth, right? I mean, as a marketing agency, we work with companies all the time to help them execute against their goals, create campaigns and
Yeah.
steps to get there. What are some of the best campaigns that you've installed or implemented that, had some, real legs to it?
From a marketing
Yeah,
perspective, or
marketing business development.
yeah, I think that I'll be honest and say that I think the marketing is an area where we probably haven't given enough attention to in a lot of our companies. Um, and it's not because I don't think marketing is important. It's just that I think in the situations we've encountered most commonly, you know, customer acquisition hasn't been as much of a challenge as it is in many businesses. Now, I think as you continue to grow and you scale, and we're seeing that with one of our businesses right now, that does become more challenging. You enter new markets that are farther from home, or where your brand recognition is lower, and you need to really focus on marketing, and marketing can be really impactful. So I think we're in the process of really trying to improve the marketing in one of our companies.
Yeah.
Uh, but to date, it's not been the biggest driver for us yet. But I think it is very important.
Yeah. Yeah, clearly, acquiring other businesses and helping them grow through acquisition has been that way. What are some, for your success? What are some examples of things that maybe didn't go as planned, or mistakes that looking back you learned more from the value of going through it than they provided maybe to the business?
Yeah, there's definitely been lessons learned. I think that what we have seen, in one of our companies, we relatively early on in the investment, we decided, we're going to really accelerate growth. We're going to open several new locations in a single year, where the business had never really opened more than one, or maybe two in a year. And they did that. The company did that. They executed on it, but we saw the existing business, the existing locations, the legacy ones, got overlooked, and
Mm,
performance there suffered. So, I think it was an instance of probably doing too much too quickly, and without having the right resources in place to make sure that the overall business, all parts of the business were getting the attention that they needed. So I think that's one thing we've seen in our more, I think we've learned some lessons from that. Um, we've also we've had investments in franchise businesses, and think we learned some lessons around the pros and cons of that model, which probably too much detail for this discussion, but I think that's in some intricacies of that model that we've gotten more attuned to as we've had success in those investments, but we've definitely learned things along the way.
Yeah. Those I would say not mistakes, but the lessons learned, how do you see that continuing to evolve in the private equity space? It's been it's always volatile, right? Because money exchanges hands pretty quickly and often. Where do where do you see the evolution of the industry going?
That, it's I think the industry is at a there's definitely changes occurring in the industry. You're seeing at the, larger scale private equity bulge bracket segment of the market, there's a handful of firms that are aggregating tons of assets and developing new strategies going from equity to credit or from, uh, good operating businesses to distress or whatever it is. They're expanding their product portfolio, they're gathering assets, they're investing in bigger and bigger businesses, and returns come down, but they're still overall generating what they need, could be mid-teens IRRs, um, to attract those wide swaths of capital. And then at the lower end of the market, where we have opportunity for larger returns, I think you're seeing dynamics shift quite a bit, where there's more groups like us that are more entrepreneurial and set up differently. Maybe people have spun out of larger firms. So I think you're seeing a proliferation of these kind of more nimble, smaller firms, and then some of the more established lower middle market firms. It's getting harder to keep raising money if you're not really continuing the track record you had when you were started. So I think there's going to be a sort of a reshuffling in where dollars are flowing in the lower middle market as that continues to play out.
Are things squeezing it all right now? Meaning, you're not getting as many investors into the portfolio, or are you seeing people doubling down?
Um, I think it's somewhat case by case. What we've always So we're structured where we capitalize each deal independently. We don't have a single pool of capital that's going into all our deals. We have 1 to 2 institutions we're working with to fund a specific deal. And for us, when there's a quality deal that we believe in and that is a fit with what we do, um, the capital has been there and is still there. I do think you're seeing, um, in general, that there's capital moving to that model where people want to have more discretion about what they invest. They don't want to necessarily invest in a blind pool of capital. They don't know what the investments are going to be. They
Right.
like our model more, where we're telling them, here's the specific deal, and here's what you're investing in. So I think that's working in our favor. At the same time, like, general economic turmoil, uncertainty, just also just overall uncertainty of the government, and so many things changing so rapidly, it does get people to want to take their breath and just think more about where they're spending money, just because there's that general uncertainty. So you've got that kind of maybe working against everyone's favor, but then you've got some things specific to our model that are positive.
Yeah. Well, that's exciting. I mean, you must be, here we are, middle of the year. I guess, we always say that summer's is just the linchpin for the second new year of Labor Day, right? Like,
Yeah.
so we're doing all the groundwork so that people realize in the fall it's, hey, we only have a couple months left of the year. Are you seeing more opportunities coming your way right now to evaluate? Like, is deal flow good?
Yeah, deal flow's picked up. I mean, I think it was strong to start the year. It kind of slowed down a little bit, and then it's really picked up in the last month or so. And I don't know for sure if that's indicative of the market or just for us specifically. But we've got a part of our approach is to be thematic and proactive about these are the areas we really want to invest in, and try to find deal flow that we're really well educated on, that space, and can be differentiated, but also hopefully find deals that other people aren't looking at. And some of our work that we put into that earlier in the year is, I think, starting to pay off. So, we're really busy looking at several interesting deals right now, and we'll see how things go. It's always it's difficult to get a deal done for many reasons. Oftentimes it's just you learn things as you learn more about the business, and maybe you don't want to do it, or the seller
Right.
changes their mind, or whatever. So you never know, but our pipeline's pretty robust right now.
That's great. Well, if there are folks out there right now that are, running family owned or small companies that are ready to take the next step and look for a partner like NB Group, how do they get in touch with you?
Yes, you can find me on LinkedIn, Neel Bhargava. You can email me at neil@nbgroup.us. That's Neel, two E's, at nbgroup.us. Or just go to our website and you'll find all our information there, nbgroup.us.
Great. Well, Neel, I really appreciate you sharing your insights and talking a little bit about the trends and the future of private equity, learning more about your business. I think this has been awesome.
Yeah, great. Good conversation. Enjoyed it.
All right, likewise. Well, on behalf of my guest today, Neel Bhargava, the founder of NB Group based in New York City, you've been listening to the TAGLine Podcast. Until next time.